Okay, so you sent over Narayana Hrudayalaya's Q3 FY25 earnings call transcript. And, we should probably do a deep dive on this.
Definitely.
This hospital network is clearly thinking big,
Yeah.
expanding in India and abroad.
Mm-hmm.
And I think it'd be great to unpack their strategy for growth and,
Yeah.
what it means for the future of affordable healthcare.
What I think is so fascinating is how they're balancing this rapid growth
Yeah,
with this commitment to being financially smart.
right.
They're not afraid to take risks, but they're always thinking about the long game.
They're not just like burning money,
Exactly.
just spending to spend. They're being pretty strategic about it.
Yeah, and you can see that in their capital expenditure plan. I mean,
Yeah.
they're historically known for being conservative,
Right.
but this call, it's like a whole different approach.
Yeah, they're going all in on this capital expenditure plan.
Mm-hmm.
Let's start with that Cayman Islands expansion.
Yeah.
I mean, they launched this new facility in Q3, and already they've seen some pretty impressive margin recovery.
Oh, yeah.
We're talking almost back to their overall average.
Mm-hmm.
And this is despite bearing 85% of the new hospital's cost.
That's right. And the way they're doing it is really interesting.
All right.
They're basically running those two Cayman facilities as one big campus.
So like a unified system.
Exactly. And that lets them share resources,
Yeah.
optimize expertise,
Mhm.
which ultimately means a better experience for patients
Right.
and better financial outcomes for the network.
That makes a lot of sense.
Yeah.
But, initially they had hoped to attract a lot of U.S. medical tourists to the Cayman Islands.
Mm-hmm.
And that hasn't really worked out as they planned.
Yeah. The U.S. healthcare market is a beast.
Yeah.
It's so complex.
Okay.
They were working with this idea of patient fungibility.
Okay.
Basically, that patients will just go wherever it's cheapest.
Right.
But it just doesn't work like that.
Right.
You have insurance networks, just, have existing relationships with providers, all these factors that make it really tough for a new player to come in.
Yeah. It seems like they've learned that lesson.
Definitely.
Because even within India, they're seeing that, people would rather get treatment closer to home,
Uh-huh.
even if it's a little bit more expensive.
Exactly.
So convenience and familiarity trump lower costs.
It really highlights the importance of understanding the market.
Yeah.
And, adjusting your strategy.
Right.
And that brings us back to their capital expenditure plan in India.
Okay.
They're going all in on these new greenfield projects.
Now, for those of us who aren't healthcare finance experts,
Sure.
what exactly does greenfield mean?
So greenfield means you're building a brand new facility from scratch, as opposed to brownfield, where you're acquiring an existing hospital.
So why the focus on building new?
They talked about how hard it is to find hospitals to buy
Yeah.
that are a good fit and at a price that makes sense.
I mean, it sounds like the healthcare market in India is pretty hot right now.
Yeah, it is. It's super competitive.
Okay.
And they don't want to overpay for something that doesn't fit their vision.
Yeah.
By building new dues, they have total control over everything.
Okay.
The design, the
Mhm.
construction, the
Mhm.
tech they use.
That makes sense.
Yeah. And their new HSR hospital in Bangalore is a good example.
Okay.
Their per-bed cost there is higher than their other projects.
Oh, like that.
Well, land in Bangalore is really scarce,
Okay.
especially in desirable areas.
Yeah.
And there's huge demand for high-quality healthcare there.
So basically they're paying a premium for a prime location.
Exactly. It's a long-term play.
Okay.
They're willing to spend more upfront because they know the potential is huge.
So it's not just about cost, it's about strategic positioning as well.
Exactly.
So they're not ruling out brownfield acquisitions completely.
Right.
But it seems like they're prioritizing greenfield projects for now.
It's about control, making sure those facilities meet their standards.
Yeah.
They did mention that they're open to brownfield opportunities,
Right.
but only if everything is perfect.
Okay.
The location, the size, the price, and then there's regulatory compliance. Acquiring an existing hospital can come with a lot of baggage.
Right. You never know what you're going to get.
Exactly.
So speaking of acquisitions,
Yeah.
what about their overall approach to growth?
Mm-hmm.
I mean, they seem to favor organic expansion,
Mm-hmm.
like building from within,
Right.
but they've also made some strategic acquisitions.
Yeah, like that 4% stake in Doctors Hospital in the Bahamas.
That's right.
That's an interesting one.
Yeah, it's a relatively small stake,
Mm-hmm.
but it gives them a foothold in a new market.
Right, and the potential to get more involved down the line.
Yeah, so kind of testing the waters.
Exactly. But overall, they see organic growth as their foundation.
Okay.
It allows them to carefully build their brand,
Yeah.
establish efficient processes, and maintain a consistent culture across the entire network.
So organic growth is the priority.
Mm-hmm.
But they're not afraid to make a strategic acquisition if the opportunity comes up.
Right. But even with inorganic growth,
Okay.
they're very disciplined.
Okay.
They're only going after acquisitions that fit their criteria and that offer a strong return on investment.
So it sounds like a pretty balanced approach.
Yeah, I think so.
Now, even with these international ventures,
Mm-hmm.
their primary focus is still very much India.
Oh, absolutely. India is like the holy grail of healthcare markets right now.
Really?
It's got huge potential for growth and impact,
Okay.
especially for addressing the needs of such a large and diverse population.
And their expansion within India
Yeah.
is really focused on these core cities,
Mm-hmm.
like Bangalore and Kolkata.
Mm-hmm.
And they've mentioned like catering to changing customer preferences
Right.
and the growing demand for localized care.
They've noticed this shift in patient behavior.
Mm-hmm.
People want to stay closer to home for treatment,
Okay.
even if it costs a little more.
So it really reinforces the importance of, building trust within these local communities
Exactly.
and making healthcare services as convenient as possible.
Absolutely.
So their region and strategy involves having one large flagship hospital in each city.
Right.
And then they're supplementing that with smaller 200 to 250 bed hospitals that are kind of strategically located throughout the city.
It's a hub and spoke model
Okay.
that allows them to offer everything from basic care to those more specialized treatments, and they make sure it's readily available to patients across the whole city.
So it's about building a really robust healthcare ecosystem that caters to each specific region.
It's all about understanding those regional nuances and adapting to them.
Right.
And that actually ties into their aggressive expansion plans for primary health clinics.
Now, they mentioned a target of 50 new clinics in the coming year. That's a lot.
It's ambitious for sure.
I mean, are they spreading themselves too thin?
That's a good question.
Or is this like the blitz scaling?
Right.
They need to really win in India.
Well, the clinics are really important strategically.
Okay.
They help build that strong patient base, and they drive adoption of their insurance plans, which we'll talk about later.
Right.
But they are aware of the financial strain. They've talked about needing to control the burn rate.
So it's like this delicate balancing act.
Absolutely.
Growing quickly while staying financially responsible.
Exactly.
And I think that's where their history of being conservative with capital expenditure kind of clashes with their more aggressive strategy now.
It's definitely a tension they're going to have to manage carefully.
Yeah.
On one hand, they got to seize these opportunities because the market's moving fast.
Right.
But on the other hand, they can't overextend themselves.
Right. They can't just go spending crazy.
Yeah.
It's about finding that right balance.
Yeah. Finding that sweet spot between growth and stability. Yeah. It'll be interesting to see how they pull that off.
Right.
But, this like calculated risk taking, it seems to be like a pattern with them.
Oh.
Like with their insurance product, Aria.
Right.
It's pretty bold to launch a whole new insurance product like that.
Especially with features like walk-in, walk-out service.
Oh, yeah.
Within their network.
That's huge.
No pre-approvals needed.
Right, just like straightforward access to care.
Yeah, that walk-in, walk-out service, no pre-approvals, no co-pays.
Yeah.
That's a huge change from how insurance usually works.
It is.
It seems like they're really trying to simplify things.
Yeah.
Especially for like small and medium-sized businesses.
Right. They're the ones they're targeting with Aria initially.
Okay, so why those businesses?
Well, they often have trouble offering good health benefits because traditional insurance plans are so complicated and expensive. Aria could be a game changer.
Okay.
It's more affordable.
Yeah.
It's easier to manage, which means those businesses can attract and keep good employees.
It's interesting how they're creating this like integrated healthcare ecosystem.
Yeah.
They attract patients with affordable, convenient clinics. They build loyalty with excellent care, a streamlined experience.
Yeah.
And then they offer comprehensive insurance that keeps those patients within their network.
It's a smart strategy for sure.
Yeah, but it requires a lot of investment.
Oh, yeah, definitely.
We're talking about their primary healthcare clinics, too.
Yeah.
Aiming for 50 new clinics this year. That's a huge undertaking.
It is a massive expansion.
So it sounds like they're going all in on this approach.
They are betting big.
But they've been pretty vocal about the challenges, too, right?
Yeah.
I mean, balancing growth with financial sustainability.
Yeah.
That's not easy.
It's tough, especially when you're launching a whole new insurance product.
Right.
And expanding your clinic network so quickly.
So are they pushing it too far?
They did say they're focused on controlling the burn rate.
Okay.
So they're not just spending recklessly.
So they're walking this tightrope.
Yeah.
Between investing heavily in expansion, but also maintaining financial discipline.
Right.
And I think a key metric here is their debt to EBITDA target of around 3.
Yeah, that's an important one.
Now, for those of us who aren't finance wizards,
Sure.
what does that actually mean?
Basically, it means they're aiming to keep their debt level manageable compared to their earnings.
Okay, so they're not taking on too much debt.
Exactly. It shows that they're thinking long term.
Right.
They're not just focused on making a quick buck.
Yeah, they're building for the future.
Right. They want a business that can thrive for years to come.
And that focus on financial sustainability seems to be a recurring theme with them.
Yeah, it's a core part of their philosophy.
And it makes sense given how ambitious their growth plans are. We've talked about their greenfield projects in India.
Yeah.
But what about their regional strategy?
So the regional strategy is all about adapting to the local market.
Okay.
They've noticed, for example, that even in India, patients often prefer treatment closer to home.
Even if it's a little more expensive?
Even if it costs a bit more.
So convenience and familiarity sometimes outweigh lower costs.
Yeah, it's like you don't really appreciate your local hospital until you need it.
Exactly.
And they're responding to that by building lots of facilities in their key markets.
Okay.
So patients can get specialized care without having to travel far.
It's about bringing healthcare closer to the people.
Exactly.
And you can see that in how they're approaching cities like Bangalore and Kolkata, one large flagship hospital per city, supported by a network of smaller strategically placed hospitals.
Yeah, it's that hub and spoke model again.
Right.
It lets them offer a wide range of services efficiently, while maximizing convenience and access for patients.
So they're creating this healthcare ecosystem within each city.
Yeah, it's all connected.
And their primary health clinics are a big part of that.
They're like the entry point to the whole Narayana Hrudayalaya network.
And this reminds me of their experience with medical tourism in the Cayman Islands.
Oh, right.
They were hoping to attract a lot of U.S. patients. But it turned out the American healthcare system, it's just a different beast.
It's its own world.
Right. You have insurance networks, pre-existing relationships with providers, and this lack of what they call patient fungibility.
Right. The idea that patients will just go wherever it's cheapest.
Exactly.
Which just isn't realistic in the U.S.
So it was a tough lesson for them.
Definitely.
But a valuable one.
Yeah, it showed them that expanding internationally is really complicated.
Yeah.
It's not as simple as just setting up shop somewhere new.
Right.
You have to really understand the local market.
So for now, it seems like their international strategy is more about these strategic partnerships and like targeted acquisitions.
Right, like that Bahamas stake.
Exactly.
Instead of like massive expansion.
Okay, so the more cautious approach.
Yeah. They're being careful.
Yeah, testing the waters.
Exactly. Building relationships. It's definitely a different pace compared to their growth plans in India.
And speaking of India, let's dig a little deeper into their capital expenditure plan.
Okay.
I mean, building all these new facilities.
Yeah.
That's a huge financial commitment.
It is.
So how are they funding all this?
They're using a mix of debt and internal accruals.
Okay, so what does that mean?
They've got long-term loans from banks.
Okay.
And they're also using cash flow from their operations.
And they seem to be pretty careful about managing their debt levels.
Oh, yeah, they are.
That debt to EBITDA target of around 3, that's a sign of their discipline.
Definitely it shows they're committed to being financially responsible.
So they're stepping on the gas with capital expenditure.
Yeah.
But they're also keeping an eye on the speedometer.
I like that analogy.
Right. They're driving fast, but they're not being reckless.
Exactly.
But this rapid expansion, it's not just about buildings and equipment.
Right.
They're also investing heavily in technology.
Well, yeah, they are.
To boost efficiency and improve the patient experience.
They've got a really impressive tech setup.
Okay, like what?
They've got an app for appointments.
Okay.
Self-service kiosks for registration and billing and systems to get lab results back super fast.
So they're using tech to streamline everything.
Exactly. It's about making things smoother and faster.
And I bet that makes a big difference for patient satisfaction.
Oh, yeah, for sure.
Nobody likes waiting around in a hospital.
Right.
And they're even using data analytics to improve patient flow within their facilities.
Yeah.
Okay, so less waiting, less bottlenecks.
Exactly. It's all about making the experience as seamless as possible.
It's smart because a happy patient is more likely to come back.
And more likely to recommend you to others.
Exactly.
So it's good for business.
And they're not stopping there.
No.
They're constantly looking for ways to improve.
Yeah, they're always evaluating their processes.
Okay.
Trying to do things better, faster, and more efficiently.
That's the key to success in any industry.
Is.
But especially in healthcare, where the stakes are so high.
Every little improvement can make a difference.
Right.
For patient outcomes and the overall quality of care.
Now, this commitment to efficiency extends to their finances, too.
Right.
They've been very open about the challenges of balancing growth and profitability.
They know that rapid expansion comes with risks.
Yeah, especially in healthcare, where it costs so much to get started.
Exactly.
They've talked about their efforts to control the burn rate.
Yeah, especially as they grow their clinic network and their insurance business.
So they're being cautious.
Yeah, they're managing their cash carefully.
Prioritizing projects that offer good returns.
Right, and being smart about their debt.
That debt to EBITDA target of around 3, that's a good sign.
It is. It shows they're committed to financial discipline.
So they're not just chasing growth at any cost.
No, they're building a sustainable business.
A business that can last.
Exactly.
It's a tough balancing act.
It is.
But so far, they seem to be managing it well.
Yeah, they're doing a good job navigating those challenges.
So to recap,
we've
covered their capital expenditure plans, their regional strategies, their approach to organic versus inorganic growth, and their focus on financial sustainability.
We've also talked about their use of technology, their efforts to improve efficiency, and their focus on building a strong brand.
They're firing on all cylinders.
They are. They've got a lot going on.
Yeah, it really is a lot to take in, but I think we have a pretty good handle on their overall strategy. But their primary healthcare clinics, those seem to be a key piece of the puzzle.
Absolutely.
They're really putting a lot of resources into expanding that network. So what's the thinking there?
Well, those clinics serve a lot of purposes.
Okay.
First, they provide accessible and affordable care to a wider population, especially in those underserved communities.
So it's not just about profits.
Right.
There's a social impact element here, too.
Definitely. They're committed to making quality health care available to everyone.
Okay.
No matter their income or where they live.
That's great.
But the clinics also make sense from a business perspective.
Right, because they mentioned that the clinics are a big driver for their insurance plans.
Exactly. They're like a gateway to the whole Narayana Hrudayalaya system.
Okay.
Patients who go to the clinics can easily be referred to specialists within the network if they need it.
Right.
It's all connected.
So it's a seamless experience. And I imagine once a patient has a positive experience at a clinic, they're more likely to choose Narayana Hrudayalaya for their future healthcare needs.
Right, and they're more likely to sign up for their insurance plans.
So it's a win-win.
Yeah, it's a smart way to build loyalty.
But all this expansion has to come with some risks, right?
Of course.
I mean, can they manage this growth and stay financially stable?
Well, that's the big question, isn't it?
Right.
They've acknowledged the challenges of balancing growth with profitability. It's not easy.
Especially in an industry like healthcare.
Yeah, where you need so much capital up front.
Right, those upfront costs are huge.
And they've been very open about their efforts to control costs, especially with the clinics and the insurance rollout.
Their debt to EBITDA target of around 3.
Yeah.
That seems to be a key metric for them.
It is. It shows their discipline.
Right. They're not just spending recklessly.
Exactly.
They're being strategic and measured.
Yeah, they're not just chasing growth for the sake of it.
Right. They're building something sustainable.
Absolutely. They understand that financial stability is essential.
Yeah.
If they want to achieve their goal of making quality healthcare accessible to everyone.
And I think that's what really impressed me.
Yeah.
Their commitment to using technology to make things better.
Right. From the appointment app to those self-service kiosks.
Yeah. They're using tech at every touch point.
Yeah. They're ahead of the game in that sense.
They really seem to get it.
They do.
That technology can be a game changer in healthcare.
It's not just about automation.
Right.
It's about optimization.
Okay.
Reducing wait times. Empowering patients.
And all of that leads to a more seamless and positive experience.
Absolutely, for both patients and staff.
And they're focused on maximizing throughput.
Yeah, especially in those smaller hospitals.
That's smart.
They're making the most of their resources.
Right. They know they need to be efficient.
Yeah.
If they want to keep costs down.
Absolutely.
And make their model work. But it's not all about efficiency. Right. They're also investing in building their brand.
Oh, yeah. Brand reputation is huge in healthcare.
And they're taking a multi-pronged approach to it.
From the clinics to community outreach.
Oh, okay.
They're trying to build trust.
Yeah.
Cultivate a positive image.
So it's about more than just providing medical care.
Exactly. It's about building relationships, understanding the needs of the community, and creating a brand that people can trust.
And that trust is so important.
Especially as they expand their insurance business.
People need to feel confident that Narayana Hrudayalaya is a provider they can rely on. So as we wrap up this deep dive, what's the takeaway for our listeners?
Well, I think the big takeaway here is that Narayana Hrudayalaya is a company on a mission.
Okay.
They're tackling this huge challenge of making quality healthcare accessible and affordable.
Right.
And they're doing it in a really bold and innovative way.
They're not afraid to shake things up.
Exactly. They're taking risks, making big investments.
They're disrupting the traditional models.
But they're also being smart about it.
Yeah.
They're balancing that growth with financial discipline. They're using technology to make things more efficient.
Right.
And they're building a strong brand.
So they've got a long way to go.
Yeah, for sure.
But they're definitely a company to watch.
Absolutely.
Their success could have a ripple effect, not just in India, but potentially around the world. If they can make this model work, could it be a blueprint?
It's a great question.
For other countries that are struggling to provide affordable care?
I think it's definitely something to consider.
It is. Narayana Hrudayalaya is a fascinating example.
They are.
Of how to balance purpose and profit, innovation and execution.
They're pushing the boundaries of what's possible in healthcare.
And I think that's what makes them so interesting to follow.
Absolutely. They're a company worth keeping an eye on.